Hello traders, today is the 3rd of February 2013, and the time in London is 13:33 in London, okay? In New York is 8:33 a.m. Happy Sunday to you all. This video is about how to combine, okay, the Elliot wave principle with Fibonacci. All right, let's get started, okay, before it is too late. All right, we are looking at the stock LLTC, Lima Tango Charlie. Okay, the stock is a Linear Technology Corporation, American stock. Okay, and we are on the yearly chart. All right, so if you haven't watched the yearly chart for a long time, this is one for you. Okay, do not be afraid of it. So we have here, we see that linear technology was bullish. There was a bullish cycle. Look at that. Boom, 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 boom. You wish you catch it. So from 1991 up to 1999, okay, you see what has happened in 1999 to 2000, to the year 2000, is the tech bubbles, okay. So it was bullish for linear technology, okay. It went up to $74. So there was a bullish cycle, a clear-cut bullish cycle, okay? And you will also notice that the market itself, the S&P 500, was bullish during that time because of the tech bubbles. But this stock was quite, okay, bullish for a long time, 1991 to 2000, okay? Almost 10 years, bullish progression, non-stop. You don't want to be bear during a bullish. So if you draw a trend line, you will see that it's a rising channel. In fact, what has happened here, there was a kind of, before we continue with the Elliot wave and the Fibonacci very fast, just to highlight that there was a distortion here. Traders that are following that know that diagonal move, okay, and a vertical move, retracement to the opposite diagonal. So we see a kind of, I will stop my, I will show you here very fast, okay. So if you are new to us, okay, just something you need to know, also very fast. I will color them in blue. We want to know if there is a distortion or not, because sometimes if you can't recognize distortion, you can apply the rules wrongly, which means you made a lot of mistakes. You want to understand what is a distortion also. Okay, waiting for my computer to respond. So we see that the price went up and then went vertical. The normal progression of the price, okay, is, okay, diagonal progression, steadily like this. Then it goes vertical. We want to watch it carefully if it's going vertical. So there was a kind of distortion, which means exaggeration. Doesn't mean manipulation, but exaggeration, excessive bullish sentiment, okay? So we want to watch, because we know that if it's going vertical, there's a high chance very soon it will peak, all right? That's why you need to understand. Okay, it will peak at one point. So you want to be ready for it. As you see it going vertical, you are securing your gain because the ladder is now, okay, vertical. Instead of having a diagonal ladder, we have a vertical ladder, all right? But in fact, the movement from here, which I put in red here, this section here, from here to here, I have discounted the wick on the top, was, okay, 5 Elliot wave. You may say to me, where is it? So as Elliot wave trader, you want to see what we call the internal waves. So on this yearly chart, from here to here, that's one wave, okay? But this one wave can be divided into 5 waves, which are sub-waves of this single wave. This is what we call the internal wave. If you want to see the internal wave, we must go to a lower time frame. I'll go, for instance, to the monthly chart to see whether I can recognize the internal wave of, okay, the first wave. You see here, this is where my drawing has stopped. You can see that the price went up, look, from here to this level, and then come down. That's the week session, okay? All right, the antenna on top of the yearly candle, this section here, you see, up and cancel. So that's why I stopped my drawing here. Now if I go back again to the yearly chart, you'll see it. So try to play with different time frame and you understand. You see, from here to here, the week, you see. So I go back again to the monthly chart because we want to see the internal waves. Here we have seen a 5 Elliot wave. I will remove my drawing the diagonal and vertical move. I will remove them. And I will draw on this chart the internal wave. Please feel free, okay, to disagree with my count. And I will tell you that this is my count, okay? But it's your right to disagree, okay? So let me draw my line. So from here to here. That's the first Elliott wave. From here to this level here, that's the second, okay, Elliott wave. And then we have, hold on a second, 1. I have a reason why I'm saying 1. Okay. 2. Okay. Moment, please, ladies and gentlemen. Stay with me. Okay. 3. Okay. And then we have a 4. I'm going to color the white line, so do not worry. I'm going to color them. Don't worry. I'm with you. Okay. Understand, traders. Okay. So don't worry. So I'm going to color them so you can see them clearly on my chart. I'll use blue because blue is very clear on this on the background of my chart. Moment, please. Okay, just finished my coffee now, so you can see that I'm a bit excited with coffee. All right, but okay, let me do it properly because some traders are very straight with me. They will say to me, George, how can you do this? Okay, all right. Okay, now let's move on very fast. Try to cut my time short, not to. Okay, moving on. By the way, I want to say to trader, thank you for your participation because it's very important for us that you comment, you rate the videos, and we know exactly what you think so we can improve. Okay, so I was saying to you, the first area wave from here where my cursor is up to this level here, that's the first area wave. So from 1992 to 1996, first area wave for this okay, LLTC. Second wave from here down to this level here. Okay, let's color it into red so you can see the second wave into red. And then the third area wave has been divided into 5 waves. From this level here, where my cursor is, pay attention, up to this level here, that's the third area wave. Feel free to disagree with me, okay? That's the third area wave, which has been divided into 5 small subwaves. First wave, second wave, no. Let me start again. First subwave, second subwave, third subwave, fourth subwave, okay, and the fifth subwave. You have to understand that during that time, it was a tech bubble, so a lot of people were buying the tech stock like a mad, so to speak. And then I have my fourth wave, which is very difficult to notice on this chart. I will color it in peak so that it can be very visible. Can you see on my chart? So from this point down to this point, okay, that was my fourth wave, and the fifth wave, okay, is this section up to this point, which I'm going to color now into black. As I said to you, feel free to disagree with me or to put okay your comment below. So that's it. So from here to here, okay, all right. First wave from here to here, second wave from here to here, and the third wave from here all the way up here has been extended big time because of the bullish sentiment relating to the tech stock, talking about the tech bubbles. It's normal during the bubble period to see the third wave highly extended. And then, okay, the music has changed here, and then the fourth wave, which is the pink one, and the fifth wave failed to exceed the high of the third wave, telling her that the bearish pressure is on. Can you see it on your chart? Okay, so we have a bearish trend line. You see this point and this point allow me to draw my bearish trend line, which I'm going to color. Which color should I use? Turquoise. Okay, let's start turquoise. You can see it. Okay, see this point, the top of the third wave and the top of the fifth wave. Allow me to draw my turquoise. Look at my beautiful. Have I removed my line? It disappeared now on my chart. Where is it? All right, magic is happening here. Let's draw it again. I don't know what's happened to my drawing, but you see now it happens here in front of us. Okay, let's use a black color this time. Hopefully, maybe it's hiding behind. So you see now, so with these 2 points, you see how the price did? He break above, come back and retest it on the dot, came back again, retest this one again, and now is rolling it up. You see, beautiful. With the trend line, we can make excellent decision. Bullish zones. So we see that The first wave on the yearly chart has been divided into 5 sub-waves, okay? And the third sub-wave has been divided into 5 sub-waves again. So what we have seen on the yearly chart, though we can see our internal wave on this yearly chart, going back to a lower time frame, now they are very, very clear to us. Another thing I need to mention to traders here is that because we knew what has happened during that time, if you know the tech bubble, so we knew in 1999 to 2000, everybody was loading it. Extension, extension, extension. As I show you on the yearly chart, diagonal move, vertical move, retracement to the opposite diagonal. This is what's happened here. I mean, not exactly, but this is what is taking place here. All right. So on the yearly chart, we see one wave. Okay, that wave has been divided into 5 waves. We see the internal wave. We know what's happening now. I will remove all my drawing on this chart. Delete all drawings. I'm using TC2000, by the way. So there was one wave on this yearly chart. We see the internal waves now. So I can go back again and draw my first wave like this. When we want to combine the Elliot wave with the Fibonacci, we need to understand the wave cycles, the Elliot wave cycle. The Elliot wave cycle is the motive wave plus the corrective phase, the trending phase. So this is from here to here, this is the trending phase. This is the correcting phase. So now we have the price doing something like this, ABC. Pay attention. So I'm going to draw it from here instead of up here. A, okay. B, okay. C, all right. So this we will say at this point in time, that's what we can say so far. Ladies and gentlemen, when we are using the wave, we don't know what the price will do next. It may come back and come back down here. It may continue the movement to that side. But right now, what I'm looking at, without fooling myself, trying to interpret what the price is telling me, this is the second wave, which is a corrective phase. Okay. Now I will use is green visible? I will use black. Okay, use black to highlight. Okay, this is the A corrective phase. A B corrective phase, use pink, and a C corrective phase, I will use blue. Okay, but from here to here, that's the second Elliot wave. We are expecting this currency, this not currency pair, because I tell forex all the time. Shut up, George. It's not only about forex. Okay, stock. This is stock. Come on. All right. So LLTC, stock, Linear Technology Corporation, to start the third Elliot wave here. Now you are getting excited about it, but before you get very, very, very excited, do me a favor. Traders know what I'm going to say. Go to Google Finance, go to Yahoo Finance, check the fundamental relating to this linear technology. Check Apple stock, because this is a tech stock. You want to check the market leaders. Check Google stock. If they are bullish, they are market leaders. Check the sector of the techs. Check, okay, the fundamentals, the balance sheet, the cash flow, okay. And if you are satisfied with it, there's without a strong fundamentals, without, okay, a viable, okay, trading triangle, okay, we cannot have, okay, a valid third wave. So for this third wave cycle to continue, conditions must align carefully. Fundamental must be strong, and talking about the trading triangle, everything should align nicely for us, which means the S&P 500, which is the market itself, should be going up. If the S&P 500 suddenly start going down, we may not have, let's see, we may not have, okay, the third Elliot wave for this, okay, stock. How do we use the Fibonacci and combine it with Elliot wave? So we see our second Elliot wave, so we will do. We will use Fibonacci retracement, okay? We want to see how far the second wave went down. In this case, you can see it come to the 50%. What is 50%? Okay, TST traders will say to me, George, I know it, the psychological price level. You see, that's what we want. We want you to understand it. To understand it with your head and with your heart, all right? Okay, follow us at George Trio, where I'm tweeting very often, and also at Google+. Add me to your cycle, and you know, you will follow us, okay? So this is the 50% retracement. So the second area wave, traders took, okay, 50% of this move. So we will expect the price. So now we know the first wave, now we know the second wave. You understand? It's 50% Fibonacci retracement level. Now we want to project, okay, how far, okay, the third area wave is likely to go. Using the Fibonacci retracement 50%, the price has a high chance to go to 127% or 150%, even to 314%. Do not bet on it, that it will definitely stop them. You can go to www.24areawave.com, okay, click on Wave Genius, where I explain to traders the projection of a channel that can help us to know, okay, how far the third area wave will go. But in this case, I will use, okay, Fibonacci extension. All right, Fibonacci extensions. So we will put on our charts that our first target zone is 1 to 7%, which I will color in red so we don't miss it, okay? The second target is 138%. These are conservative, okay? You will see some pop-up coming on my screen again. And the second target is, these are just the 1 to 7 and 138.2% Fibonacci, okay? Extension zone. These are conservative target zone for the third area wave, provided that the market itself is bullish. Otherwise, it's just blah, blah, blah. So the market first, the sector, before the individual financial instrument, the heart of the trading triangle, ladies and gentlemen, is what we are saying to traders all the time. So you can trade like a pro, you are flexible, you are adapting to the current market sentiment, you follow the market cycle, you don't do your own thing. I'm not saying that it's impossible for a stock to backtrend the market. It's possible. You will see that very often when we are talking about the healthcare sector. Some stock will trade against the current market, but very often we want to align it with the market. Okay, if you see a stock trending against the market, you want to manage it carefully. Okay, it is not impossible, but very often they follow the market. So our first target zones is this zone here, around 60. Okay, so you hear some analysts saying to you that this stock is bullish, it's likely to go to the 60. All right, but nothing. If the sentiment is very bullish, if the market is very, very bullish, if suddenly a bullish cycle has begun for the S&P 500 above 1645, as I put on our YouTube channel, www.youtube.com/JoTrio, because we have two channels. You are watching here at 24 Area Wave, www.youtube.com/24 Area Wave. There's another channel, www.youtube.com/JoTrio. And as to traders, the level we want to watch for the S&P 500 is at 1645. I'm speaking fast because I don't want the video to be too long. So the next target, if the S&P 500 finds support above 1645, there's a high chance that we may see a bullish cycle, if that's possible. If the economy in the United States is bullish, if the global economy is recovering very well, okay, there is a high chance that we may have a bullish cycle, but that remains to be seen. If the music has changed, the dance also must change. Do not assume anything, but trade like a professional traders, following the price itself, the number one indicator. So by determining the first wave and the second wave, we can use the Fibonacci extension to determine, okay, the target zone for the third area wave, okay, even the whole cycle. All right. Another thing that I want to point out here, how we can use Fibonacci area wave. Here we can see that the price, there was an uptrend, and then the price went out like this, okay. We want to know, okay, all right, the retracement, okay. Once we know the retracement, as I'm drawing here, you see that I start drawing from here, okay. My drawing on the Fibonacci was from here to here. Going to the mind of other traders, some trader will push it all the way to the top of the wick because the price went there. So you want to go into the mind of other traders, okay, to know what these traders, okay, are trading. Trading is becoming more like a mind game, and you want to, okay, also, okay, play the mind games, okay, very, very important. So here, with the internal wave of the first wave and the second wave, we can forecast what is likely to happen, okay, to this stock, which is the video before this one, okay. okay, on our channel, okay, I was telling you how to forecast the market, okay, with the internal wave here. Well, let's go back again for traders that are new to us. It's a bit advanced, okay, which are called advanced trading tips, if my recollection is correct, advanced trading tips. Now we see the internal wave of the first wave, which I show you here, okay. Once we know the first wave and the second wave, we can forecast, okay, the whole Elliott wave cycle that is likely to take place, okay, on the yearly chart of this stock. Because on the yearly time frame here, we have the first wave from here to here, and the second wave from here to here. With these two waves, okay, we can forecast what this stock is likely to do. Alright? We can forecast it. According to the internal wave of the first wave here, which we have seen on the monthly chart, pay attention carefully, ladies and gentlemen. There is a high chance we may have a very extended third Elliott wave on the yearly chart for this stock. And a very tiny fourth wave, followed by, okay, another, okay, fifth wave that could not exceed the high of the third wave. So this is why we can forecast with the internal wave that we have seen for the first wave on the yearly chart. So the internal wave of the first wave on the yearly chart, which we can see on the monthly chart here, we are now on the monthly chart. The monthly chart reveals to us the third Elliott wave is extended, okay? In fact, the fifth wave, the internal fifth wave, couldn't exceed the high of the third wave. So what does it mean? It means to us that if you go to the yearly chart and the third Elliott wave, okay, is truly strong, this stock has a high chance to exceed our conservative expectation, even going into the zone of a 314% extension zone. Okay, we can measure it. Okay, all right, we can measure it, we can forecast it. Okay, but we will not impose our expectation on the market. But there's a high chance, if we have a bullish cycle, if the market is bullish, that this stock, the third Elliott wave, may be highly extended. Another information that we know from the internal wave, that the fifth wave, okay, has a high chance, okay, to fail to exceed the high of the third Elliott wave. With the Fibonacci extensions, we can set target zone with, for our wave. So we can combine the Elliott wave and the Fibonacci extension, okay, to set a target zone, exit strategy, okay, and also to manage our trade. At the end of the day, ladies and gentlemen, this is a technical analysis. One must use the trading triangle, meaning that we must pay attention to the S&P 500, then the sector to which the stock or the financial instrument belongs to, before we come back to the stock itself. Everything that we have said is conditional, okay, on the S&P 500 and the trading triangle. The third Elliott wave will not be, okay, strong if we do not have a strong fundamental or a bullish cycles. For those who are TSTWS 008 traders, you may like to put this stock on your watch list, okay, in order to participate in the, okay, eventual third Elliott wave. Going back again to the this chart on the monthly chart, I can remove all my drawing against, okay. I can remove all my drawings, and I will I want to measure, okay, all right, how far the third Elliott wave went to, okay, the internal wave, the internal third Elliott wave on the monthly chart. Okay, let me explain myself to you. We see that the first Elliott wave was from 1992, somewhere here, okay, boom. So from here to here, that's why I was telling you that it's the first wave, okay, the first wave, the first internal wave. Are you following me? Are you following me? Let me do it for new traders. I know experienced traders understand what I'm saying. For the new traders, don't get confused. From here all the way here on the yearly chart, this is the first wave. But this first wave on the yearly chart can be divided into 5 small waves. Now, we can only see that those are 5 small waves on another lower time frame. Now, I'm using, okay, the monthly chart. I explained to you also already the 5 small waves within that first wave on the monthly chart. So this is the first small wave. and the second small wave is the one pulling down to this level. I want to know how much retracement was, okay, the second, okay, Elliot wave, the second small wave, okay. I want to know how much retracement it is. You need to pay attention careful, otherwise, if you have any question, put it below and I'll answer it, okay. So this move from here to here is how much retracement, okay. I want to know, all right. Is also, let me check it carefully, 23%, 38.2, 50%. Look at the 50%. You see? The price dip below the 50% to go a bit, you will see very often, the price will go below, this is the 50% on this monthly chart. For the internal waves, look, that's the 50. Price dip below it to retest the 61, only to close above it. Look at that. So it's quite a harmonious pattern because the first wave, the second wave has retraced only 50%, dip a bit below it here. Look on the yearly chart also. Again, same scenario. On the yearly chart, look, it went up where it went to. This is 50% zone, yes or no? You remember when I draw it? It's also 50% zone, okay? From here to here, the retracement is also 50%. Look, on the internal wave again, the same ratio applies. 50% again. Here, down 50%. Now, I know this is a 50%. I know where the third area we went to on these internal waves. I want to know, I want to focus the next bigger third wave. All right, let's remove my lines again. So, to do that, I need to use my Fibonacci extensions. Okay, I need to be very, very careful here. That's it. We went into, it went above, okay, 261, 3.4. In fact, hold on please. I want to do something here. One, okay. So I'm using the range of the first wave. This is quite advanced Elliott wave and Fibonacci trading, and traders should pay attention carefully. Traders that are following us should understand what I'm trying to do here, but traders that are new may not, okay, follow me, but you can replay the video and you will understand what I'm trying to do here. I have a measurement stick here which I'm moving. This will allow me to quantify how far the price went to. Okay. I will explain everything to you when I finish. I'm just drawing now. I have a measurement. This measurement is, okay, just, okay, the range of the first wave. It went up from here up to this level. That's the range. So I'm just moving it, projecting it up. That's what I'm doing now. Are you following me? I hope so, okay? But if you are not sure, contact me, please, okay? Or ask question below. Beautiful, beautiful progression. You see the bubble, this is a bubble. When people are buying in the morning, buying in the evening, buying in the night, just buy. Don't care about the fundamental until the music has changed. It's like bulls were very drunk from 1999 to 2000. The tech bubble, people were buying. Grandmothers, grandfathers, children, grandchildren, everybody were buying. Okay, easy money. They were just buying. And but the market corrected itself big time here. So I want to count my projection. Okay, so this is the 200% projection because this is 100%. The move from here to here, this is 100% of the first wave. So 200%, 300%, okay, 400%, 500%, 600%, 700%, 800%. We have 800%, okay, Fibonacci, okay, projection zone. That's where he ended. All right, that's a bit too much. Are we going to have another bubble? I don't think so. All right, so for the yearly chart, we will not expect, okay, 800 projection of the first wave. I will think of 200% only, okay? So we are not likely to have another bubble where this stock will repeat 8 times the range of the first wave, I will be very conservative and say to myself at least 200% Fibonacci, projection of the channel. This is the channel. I'm talking about the range of the channel. If I remove my line on the yearly chart, I will show you what I'm talking about, the projection of the channel. Go to www.24Elliot click on Wave Genius, and you understand what I'm trying to do here. Now, moment please, ladies and gentlemen. Okay, now I'm talking about the range of the first wave. I want to delete all my line on the yearly chart, and I will draw a line. You see the range? You see the range? The range of the first wave on the yearly chart. If you think this is a complicated matter, it is not, okay? Step by step, okay? You will understand. So the first wave on the yearly chart went from here to this level. That's the range. If the third Elliott wave breaks above this blue line here, we will project the equal size of this channel. All right? So that will be our greediest target. So the best way for those who are using TC2000 like myself, because I know, I want to show you how you do it easily. You start drawing from below, and then you move it. This is the range. You see the size. This is the size of the first wave. It went up from here to this level. This is the size. So I have this line. I'll color into red so you can see it clearly on your chart also. All right, okay. Let's zoom into the chart a bit, okay. All right, the best way to play our video is to enlarge it, because these are high definition video. Don't be afraid to enlarge the video. Click on the enlarge button to see the bigger video, okay. So we will move it now and put it on top. That will give us the greediest targets for this stock linear technology. So we may say the first conservative target in a zone of 60%, the greediest target in a zone of 90%. That remain to be seen. These are projections depending on the market cycle, the market sentiment, the economy, environment, very, very important, So this is about how we can combine, the Elliott wave principle and Fibonacci. I hope you have enjoyed this video, that you will put it to use, to cream the market consistently. We are the TSTW S008 traders. Speak to you soon.